Hello and greetings to all of you, dear members of the BS Academy family. I'm very happy to be with you again in another video. In this video, we're going to do a few trades together, and I will explain the reasons behind each trade and provide the relevant details. I've previously mentioned a strategy in some of the channel's videos that combines trend lines with support and resistance levels. This strategy received relatively good feedback. Today, I want to expand on that, and if we spot a good opportunity, we'll make a few trades using the same strategy and explanations I provided in that previous video. Here's how our strategy works. We draw SNR, support and resistance lines, and we also draw trend lines. Where these SNR and trend lines intersect, if the candles reach that area, we can consider it a very strong support or resistance zone and use it to place a trade. Now let me show you on the chart to make it clearer. You see here that I've drawn a trend line. We had two lows and drew a trend line from them. You can see how the candles moved away from this trend line, creating a lot of distance from it in this area. They went up to a certain point. Now this trend line is still valid, and it could come in handy for us in the future, so we shouldn't remove it from our chart. If you look again, you'll see that the candles retraced here. The market became a bit ranging, with some fluctuations. Look at this section. We have a very strong red candle, followed by another downward candle. After that, a green candle formed, and then again a strong red candle with a big body came and hit right on our trend line. This was the third touch on the trend line. As it reached our trend line, we also noticed that when checking the previous market, we had drawn a valid SNR line here as well. You can see the reaction here. The shadow of this candle shows the contact with our resistance, which was then broken. When it retraced, this resistance had turned into support. So this area or zone could be very important and powerful for us. If the candles reach this point again, we can be more confident that a trend reversal will occur, and we'll likely witness a strong pullback from this zone. Let me clear the chart a bit so you can see better, and I'll also zoom in on the video for better clarity. Alright friends, take a look here. This red candle has appeared, and there's a gap between the shadow of this candle and the line. We have two possible ways to trade this scenario. The first option is to enter a trade on this red candle, or better yet, on the green candle that follows. When the price comes down and the shadow reaches our line, we open a trade at that point. See here? This could be one of our entry points, and even if it's just a 1-minute trade, we can profit from this small candle with a weak body because the price moved upward from here and we could take advantage of that shadow. This was the first scenario. The second option is to wait for the next candle to form after we see the first one. It's possible that another red candle might appear with a smaller body, and it may fill the gap to the SNR line or the trend line. If we want to make a more certain trade, we should wait for this second candle to close as well. Here we see what happened. A candle with a weak body and a long shadow, with a long rejection below it and a small shadow on top. This is one of our candlestick patterns that signals a trend reversal, and it boosts our confidence. Given that we're in a strong zone and the candle is showing signs of a trend reversal, along with the long rejections under the candles indicating buyer pressure entering the market, we can open an upward trade at the start of the next candle and confidently expect to profit. So this is the strategy I had explained before. I've talked about it in detail in another video, how we can combine trend lines and SNR levels to profit, and it's an excellent method. You should definitely try it. With practice, you'll figure out the right points to enter trades and when to avoid them. For example, in another scenario here, we have two peaks, and we've drawn a descending trend line. You can see how this trend line intersected with our resistance line here. Based on our strategy, this could have been a key area. However, we can see that it didn't play out as expected. The way the candles interact with the lines, how they close, and their reactions are very important. First, notice that the overall market trend here is bullish. These are small details that you need to pay attention to, friends. Secondly, we don't see any significant rejection from the top. The candle here has a very strong body, unlike the situation earlier where we saw a reversal signal and long rejections on both candles. But here, we don't see that pattern. The next candle manages to break through both the trend line and the resistance. So just because a candle touches a level doesn't mean a trend reversal will happen 100% of the time. If we had made a mistake here and didn't pay attention and opened a sell trade, we would have encountered a loss. So you must pay close attention to these points to be able to make a more successful trade with higher confidence. Now I'll go through different charts to find a suitable spot for a trade and discuss this strategy more. Alright friends, as I'm reviewing different charts to find a good opportunity for a trade, I'm coming across various insights that are worth explaining to you. Look here, we had an uptrend and we drew a trend line. You can see that the market reacted and candles moved upward. Then we see the red candles reached exactly the point we were waiting for, which is the intersection of the SNR and the trend line. The important point here is that this red candle, with its large and powerful body, came down without any rejection. This is a Marubozu candle, which I've explained in previous videos. Whenever you see such a candle on the chart with no shadows at the top or bottom, the probability of seeing a candle moving in the opposite direction of the Marubozu, here, the red one, is 70%. In other words, and a 30% chance of seeing another red candle. So the probability is 70 to 30. We see that after this Marubozu, a green candle appeared. However, this green candle passed through both the SNR and trend line. In fact, the Marubozu candle itself fully crossed the SNR and reached the trend line. Trading here carries a higher risk because we see a rejection at the top of the green candle, but none at the bottom. So we shouldn't open a trade here. As you can see, even after this, we observe a weak red candle with a long shadow at the top, and after that, the downtrend continued. The lesson we learn here is that whenever candles reach the intersection of the trend line and SNR, we shouldn't blindly open a trade in the opposite direction. We need to observe where the candles close, how they form, and what kind of rejection they show. If this red candle, for example, had moved from here and closed like this, with a shadow like this, we would have had more confidence. Or if the next candle looked like this, with a similar rejection, we could have confidently opened a buy trade. But here, we see that didn't happen. This powerful candle came down, crossed the SNR, and reached the trend line. The next candle's body also crossed the trend line and SNR, with no rejection at the bottom and only a shadow at the top. So we shouldn't trade here. Alright friends, I've placed a buy trade here. Let me explain what's happening while we wait for this trade to close. As we can see, there's an uptrend, the candles have been moving upwards, and we've seen a reaction to our SNR level. We also notice a few weak candles forming near the SNR, followed by a strong green candle. After that, we see 3 red candles, each with weaker bodies, and the last one has closed as a doji right on our trend line. After this, we can confidently place a buy trade, as the red candles were weakening one by one. A doji has formed exactly on the SNR and trend line, and we expect the trend to move upwards after that. As you can see, this trade closed with profit. Even though it was a weak candle and gave us another doji, we see that the trend is moving upward. Even if this trade had ended in a loss, we could have placed another trade on the next candle and it would have likely closed in profit. You'll notice that here we encountered a rare situation where 2 consecutive dojis appeared. Luckily, our trade ended with profit. I managed to open the trade at a good time, but even if it had closed at a loss, we could have opened another trade right afterward and perhaps even 2 simultaneous trades to increase the confidence of making a profit and recovering any previous loss. So I believe this point is clear now. I don't want this video to be too long. As I've explained before, the areas where SNR and trend lines meet are strong zones for us. However, we must always consider the shape and form of the candles reaching that point, the rejection they show, and the strength of the trend itself. Here we had an uptrend, so we were looking for a buy opportunity. The candles reached this area, and we noticed that the red candle bodies were getting weaker. Take a look. We first see a strong red candle, then a weaker body, which closed exactly on our SNR and gave us a rejection. After that, we see a nearly doji-like candle with a very weak body, which closed right at the intersection of the trend line and SNR. After that, I opened a trade. Even though it gave us another doji, the trade still ended in profit. If it had closed in a loss, I would have placed another trade afterward, and we can see that a very strong green candle formed, pushing the price upwards. After that, the candles moved downwards again and reached this intersection area between the SNR and the trend line. As I mentioned, this is a strong area. This red candle with its shadow was rejected and moved upwards, closing as a relatively weak red candle. If we had traded exactly on the SNR, we could have reached a profit. This particular trade had a bit more risk, but the safest setup is the one I previously explained. I hope you enjoyed this video and this strategy. Definitely give this method a try. It's a very strong and profitable approach. Make sure you practice enough on a demo account to get the hang of it. It might take some time and patience since you can't trade with this method all the time, but the risk is very low. You can confidently use this strategy and make great and successful trades. I personally use this method a lot, and I encourage you to try it out and share your results in the comments. To easily and freely register with the Quotex broker, click on the link in the video description. Dear friends, to make sure you don't miss any of our videos, please subscribe to the BS Academy channel. Also, activate the notification bell so that you are informed as soon as we publish new videos. Thank you for your support.